2 weeks ago, the Nigerian stock market hit an all-time high, and by Friday, it has closed out the ninth straight losing session. In the same week, the central bank opened a 20% risk-free government instrument directly to ordinary Nigerians, and 4.93 trillion naira showed up for it in a single session. Meanwhile, NAICOM just handed out the first real casualty for the insurance recapitalization story we followed since July. This is Money Talk. Every Monday, we break down the past week's market performance sector by sector, stock by stock, through a signature heatmap review, daily index movement, top gainers and losers, the real stories behind the numbers, earning surprises, regulatory actions, dividend payouts, and the macro forces that actually move the Nigerian market. Subscribe so money doesn't catch you blind. Welcome to this week's edition of the Money Talk NGX Weekly Heatmap Review, covering the week ended August 21st, 2026. The all-share index closed the week at 239,351 points, down 1.35%, and the market capitalization closed at 154.53 trillion naira. The breadth was negative again this week, with only 18 stocks gaining, 59 stocks declining, and 70 staying flat. Remember, on Monday, August 10, the market hit an all-time high. Since Tuesday of that week, it's been down every single day. 4 straight down sessions last week, followed by 5 consecutive down sessions this week. This makes 9 straight losing sessions in total. And this week, the slide collided with 2 of the biggest stories we've covered this year: a genuine regulatory casualty in the insurance sector, a central bank policy move competing directly for capital that might otherwise go into equity. Before anything else, let's look at what was actually traded. The total volume for the week was 2.24 billion shares, down 48.6% from last week, 12.15 billion shares. The volume nearly halved, but the value traded at 157.76 trillion, just down 10.4% from last week, 176.06 billion. If you notice something critical here is that in the recent week, we've seen volume drop less than value. And this was a sign that the trading was skewed towards cheap, low-priced penny stocks. This week, we saw that this is an exact opposite of that. The volume collapsed more than the value did. That tells us that the trading for this week linked towards higher price large cap names, not the low price churn we flagged before. The financial service sector still accounted for 89.62% of total volume, and 3 stocks made up 66.77% of the volume traded across the entire exchange. That was down from 78% 2 weeks ago, but remains at extraordinary level of concentration. Now, this is the macro story that explains why equity might be facing the immediate pressure, and it has nothing to do with earnings of most companies that were released. The Central Bank of Nigeria recently issued a circular titled Review of Discount Window Restriction and Money Market Operations Participation Framework. The headline move was that for the first time in 7 years, individuals can now participate directly in the open market operation or through their banks. This is a reversal of 2019 restriction that strictly confined OMO participation to commercial banks and institutional money lenders. Traditionally, the CBN restricted retail access to OMO bills to force individual capital into primary treasury or equities. By opening the OMO back up, the CBN isn't just offering another TB alternative, it's actively using high short-term yield to mop up the system liquidity directly from bank deposits. Under the new rule, the CBN offered 600 billion naira on the 13th of August post issuing this circular, and the total bid was 4.93 trillion. That's an 8.2 times oversubscription. The CBN ended up allotting 2.6 trillion naira, more than 4 times the original offer, which still leaves 2.3 trillion in unfilled bids. The idle cash is sitting in the financial system and actively seeking higher yields. It's possible some of those funds are moved to equities in the coming weeks. And we also saw the treasury bills being released with high oversubscription and underfilling of that too. So we hope to see those money coming into the NGX probably in a week or two from now and recover some of the losses we've had so far. If you look at the rates for the OMO bills, we saw that the 103 days bills cleared at the top rate of 20.39% and the 128 days cleared at 20.01%. And this gave a true yield of about 21.6% for a government-backed instrument, which is essentially risk-free. This would impact the equity market. And to put 4.9 trillion in perspective, the entire Nigerian stock market, that's every stock that traded over the 5 trading days of last week, was 157.76 billion trading value. And a single OMO auction drew a bid worth 31 times the NGX entire week turnover. Capital is explicitly choosing guaranteed 20% plus government yield over equity market risk right now. On the daily performance, we saw that on Monday, August 17, the ASI fell by 0.06% to 242,454.65 points on the volume of 1.3 billion shares. The breadth opened at 19 advancers against 36 decliners, and that's the fifth straight session from the peak on August 10th. Tuesday followed suit, with the index even dropping larger by 0.35% to 241,611 points. The volume dropped sharply to 429.8 million shares, and that appears to be the lightest session for the week. First Bank Holding and Fidelity Bank led profit taking for the day, and that's the sixth losing session. And it also continued on Wednesday, falling by additional 0.36% to 240,750 points. The volume rebounded to 1.19 billion shares, even though the market breadth was perfectly balanced at 27 advancers and 27 decliners. This was led by a drop in energy names like Aradel, which dragged the main index lower. On Thursday, we were down again by another 0.3%. On this day, we had the week's heaviest volume by a wide margin at 2.87 billion shares traded for the day. And this was driven majorly by insurance trading on the day NAICOM took action against Universal Insurance. Friday seems to be the second best day of the week, with a slight 0.07 decline in the market to close the week at 239,351.16 points. That's completing a ninth consecutive down session. The volume was the lightest of the week at 416.6 million shares. Before we move to the top gainers and losers, we'll be reviewing our heat map. Starting with the financial services, we can say that First Holdco has reversed its continuous gain in the previous weeks, declining by 0.18%. It appears to be a red zone with very few stocks gaining for the financial services. The top gainer is NPF Microfinance Bank with 2.47%, while the top loser is International Energy Insurance with 27.26%. So that's a almost 30% variance between the top loser and the top gainer for the week. On the consumer goods side, we can see that we tend to have more green here. Let's take this to an equal weight for the market. In the consumer goods, we have positive, but here Dangote Sugar is leading the top gainers with 5.19%. And Mark Nichols Consolidated leads the top losers with 6.73% decline week on week. And Lex of PZ Unilever also declined. We have International Brewery, so only Cadbury, Dangote Sugar, Honeywell Flour Mill, Nigerian Breweries, and Nestle advanced for the week. The industrial goods sector, we have TIP gaining 2.69%. The losers led by Mayors with a 4.49%, and Curtis also declining by 2%. We have the ICT sector, Charms leading the decliners with 8.3%, and Legend Internet, the only gainer in this sector, MTN and Omatech declining for the week. In the oil and gas sector, we have Aradel leading the losers list with almost 10% decline, and Oando edging again slightly by 0.28%. In the services sector, we have a mixed bag here with Transnational Express leading the gainers with a 16.2% gain, while Red Star is leading the top losers with an 18.33% loss. In the construction sector, our top gainer for the week, Eden Marco, we'll speak about them shortly. We also have UPDC and UPDC rate. Remember what we spoke about last week, declining together and also advancing together. In the healthcare sector, we have only one mover for the healthcare sector. That's NAICOM International, declining by 6.43%. We have the agricultural sector led by a decline in Zichi's agro-allied industries with a 7.1% decline, and Ella Lakes recovering from previous week's loss to gain 2.44%. Livestock Presco declining just below 1%. In the conglomerates, we have Chalorem PLC declining by almost 10%, and USCN able to edge again for the week at 4.6%. The utilities, we have no movers in the utilities. They are all close negative. Geregu, there's a story going on about Geregu. We'll speak about that later in the natural resources for the week. Investments, VFD declined this week, reversing previous week from last week where they were able to edge in a gain. So that's it for our map review. Now on the top losers and gainers, we have Aiden McCall, like I said previously, leading this list with a 32.3% gain, moving from 2 naira 91 kobo to 3 naira 85 kobo. This is the first time this name has appeared on our top losers and gainers. While their H1 results released a few weeks ago showed revenue growth, the operational profits were squeezed by higher cost of sales and operational and administrative expenses. So this move is not linked to fundamental improvement in their financials, and we'll be looking forward to what is driving this move, and if there are any news or any numbers in their financials or their corporate releases that can justify this move, we'll be providing context when they do come up. We have Transnationwide Express up 16.2%. This marks 3 consecutive weeks of gain and continuing steady recovery from months of decline after hitting an all-time high of 8.71 naira in April 2026. We have Dangote Sugars here up 5.19%, and this is a partial clawback of 2 weeks of selling the consumer goods space, and this is also linked to Nigeria up 4.68%, and we can see that the consumer goods was the only sector to close positive for the week with a modest 0.05 percentage gain week on week. Same for USCN, up 4.62% for the week. On the losers list, we have International Energies down 27.26%. That is a sharp reversal from the top gainers for 2 straight weeks, including a 31.68 surge 2 weeks ago, and reflecting its history of high price volatility. Fortis Global Insurance down 23.95%. Fortis was one of the 3 insurance names that generated over 2/3 of the total market volume for the week. They declined this week also. Royal Exchange declined by 18.49%. Although Royal Exchange itself has met NAICOM recapitalization requirement, its subsidiary, the Royal Exchange Prudential Life, has yet to meet the recapitalization requirement, though the parent company recently secured the shareholder approval to raise 2.7 billion in fresh equity. Let's hope they are able to meet the requirement and not follow the path of Universal Insurance we'll be talking about that was delisted and their license revoked. Red Star Express is also down 18.33%. It fell from 18 naira to 14.7 on general market sell-off, and UPDC PLC also down 10.67% to 3.35 naira for the week. Stepping away from equity for a moment, we'll be looking at the July macroeconomic data that showed a massive internal divergence in inflation figures. The headline inflation fell to 15.43% in July from a 15.91% in June. The core inflation dropped to 14.97% from 15.92%. Both numbers maintain the overall inflationary trend we've covered over the recent months. But so when talking about inflation, I think people misinterpret inflation falling to that the price of items are declining. So what inflation calculates is what is the percentage increase on either a month-on-month basis, a year-on-year basis. So in real sense, unless you have a negative number, as long as the inflation number is positive, the price is still increasing. It's just that it might be easing the level of increase or becoming worse. So the level of increase is expanding, but so far it's been reducing them from. So let's use a percentage of 10%, for example. The price of an item of 100 naira in 2024 increased to 110 naira in 2025. That's a 10% increase. If it goes ahead and increase in 2026 by additional 10%, so it's increased to 121 naira. So it's increasing by 10%, or let's even use 9% and increase to 120. It doesn't mean the fact that it's 9% to 10% doesn't mean the price have actually reduced. It just means it only increased by additional 9% on the already 10% increase in the previous year. So just to provide the context on that. But on the other hand, the food inflation surged violently in the opposite direction from the headline inflation, jumping to 20.31% in July from 17.52% in June. This is a single month increase of nearly 2.8% percentage points. While the core and headline inflation showed cooling broad price pressure, the household food costs accelerated at their fastest monthly pace for over a year. The last time we had this kind of number was in September 2025. On Thursday, August 20th, Universal Insurance PLC was suspended from trading after NAICOM revoked his operational license outright for failing to meet the recapitalization threshold. Following that, a liquidator has been appointed to take over the company's assets, and this marks the first outright license revocation of this recapitalization cycle. The enforcement action linked directly to the real estate dropping 18.49% this week. Market participants are actively repricing regulatory risks for organizations that are not fully compliant to the regulator's requirements. Concurrently, Veritas Capital Assurance listed 15 billion new shares following a private placement. Its total issued share count expanded from 13.87 billion to 28.87 billion, which could lead to a 108% dilution event to secure compliance. Finally, 66.77% of the week's total NGX volume occurred in just 3 insurance counters: Fortis Global, Lasaco Assurance, and Consolidated Allmark Holdings. The NGX Insurance Index is down 8.65% year to date. We also have the Airtel buyback, which just got bigger. Since May 22nd, Airtel Africa has repurchased 18.3 million shares at a volume weighted average price of 337.11 pence. And all the shares they bought back has been cancelled to reduce their share count, and this will improve their earnings per share. The company has now expanded the program further. The discretionary borrowing allowance was raised by $15 million, shifting from $50 million to $65 million, and they combined with the $60 million non-discretionary tranche managed independently by Barclays. The total buyback capacity now stands at about $122 million of buybacks. Increasing capital allocation towards share buyback mid-program is signaling that the management is confident on the value of the stock, and they are viewing it as undervalued relative to the performance or what they are seeing. We can also note that their full year 2026 pre-tax profits surged by 114% to $1.41 billion, and the stock has gained 177.53% year to date. To summarize, the NGX extended its slide to 9 consecutive losing sessions since August 10th peak. An updated CBN framework opened an OMO yield of over 20% to individuals and drew a capital of 4.93 trillion in a single auction demand and this is competing directly with the equities market liquidity. NAICOM has also enforced their regulatory requirements on recapitalization, and this has led to liquidation of universal insurance, while food inflation experienced its sharpest monthly acceleration this year. Going into the new week, we'll be watching three things: whether the high OMO yields will continue to pull liquidity out of the equity market, or some of the excess cash will come back into the equity market, how non-compliant insurance taker respond to NICOM's enforcement action, and where the index finally establish a floor before it bounces back. If this breakdown has been useful for you, subscribe on YouTube, follow us on all our social media platforms via Monee Talk. Thank you for listening, and see you next Monday.